Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield News anchor reporter Megan Grebner. With us is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, as we get into this week, let's start first and take a look at what happened on the markets and what's going on there.
Yes, I think we start at the pork side. Cash hog prices were down about $2.50 for the week. That's despite what were some modest increases on the future side of hog markets. When you look at the pork cutout value, we were down about $2.65 for the week. Despite being down in the overall pork cutout value, pork bellies were up for the week, $3.46. That's at or near record levels when we think about where pork belly prices are. On the cattle side of the market, cash-fed cattle, we'll call them down $2 for the week, whereas feeder cattle down mostly $3 to $8 for the week. I will say pretty limited demand this week on the calf side of the market as that bearish cattle on feed report weighed on feeder cattle prices. The choice beef cutout was down 73 cents for the week, really down across the board in almost every category on that choice beef cutout.
As we get into market news this week, I think I'm just going to refer to you as Scoop. We talked about this earlier in the month about the potential for Japan to implement its safeguard tariff on frozen beef. It was announced today they will. It will go into effect on Tuesday, so on August 1st. Let's start first and talk a little bit about how we got to that point and what this means for U.S. beef going into China, frozen beef going into China.
Yeah, so it is important, number one, to recognize this will be an additional tariff on frozen beef out of the United States into Japan. It will be the first time in several years that we are going to talk about imposing that safeguard provision. We're going to talk about a tariff that currently sits at about 38.5% that will rise to 50% as a result of hitting that safeguard provision. Would be in place through March of next year. So it really starts to make our product more expensive for Japanese consumers as we look ahead, and makes us less competitive with a number of countries that don't face those safeguard provisions. Probably most important when we think about that market will be Australia, who has their own free trade deal with Japan that was passed over the last several months that will cause them not to be affected by this frozen safeguard provision that's going to be triggered for many of the other countries that trade with Japan.
I know we're having those bilateral discussions, or they've started maybe trying to map that out. But as we look at the trade deals in general, would this have even been an issue had we signed on to TPP?
I don't think we would have seen this kind of safeguard provision potentially being triggered under a TPP. Some of those details weren't worked out as TPP was trying to get finished, but it certainly gave us a more open market under TPP than what we have now. And these safeguard provisions were done many, many years ago as we went through WTO negotiations. So it would have been a very different situation had we had TPP in place. I will remind us, though, that this is just on frozen. Fresh or refrigerated product will still not face that safeguard provision. However, I think we all expect fresh and frozen trade to increase to Japan, and we could potentially hit that trigger, I suppose, before we get through the end of their fiscal year as well. We'll just have to wait and see how much of swap we get from frozen to refrigerated product going into Japan.
And we talked about this before, but how much pressure does it put on us to get a free trade agreement ironed out with Japan because they are such a large customer of U.S. beef?
Yeah, so it remains important that we keep these markets open, and we keep all of them open, and especially one of our top three when we talk about Japan. When we have a situation in this country where we're growing beef supplies, the last thing we need is to lose a market in this period of growing beef supplies, because if we do lose those markets in front of us, that product gets backed up here in the United States and probably puts a lot more pressure on markets than we would otherwise thought would have occurred. I just remind us, when you look at where we've been in 2017, frankly, cattle and hog prices both have been higher than maybe many of us as experts would have thought going into the year. And it's frankly been on what's been strong demand, and international demand's been a part of that. Let's hope that we don't see too much of a slowdown in terms of trade, but when you see that increase in the tariff, it's going to reduce our ability to export frozen product to Japan.
It's not all bad news on the trade front this week. Some good news coming out of the trade relationship and the newly reformed trade relationship for U.S. beef and China.
Absolutely. I think we're seeing a lot more interest from different folks within China about the opportunities for importing U.S. beef. I think right now, if you look at the list of plants that are eligible to ship beef into China, it totals about 18 plants right now. Many of them are saying they're, again, getting a lot of that interest. We'll wait and see whether that generates a lot of additional quantity of product as we move through time. I think many of us continue to talk about it's a slow road to open those open that country to additional trade with the U.S. But maybe some of the very early news we're getting back out of that is that the interest may be stronger than many of us would have thought. So maybe it'll help offset some of the other issues we see coming as we see Japan with that safeguard provision. So we'll wait and see. But certainly good news when you hear the talk about packers who are saying they're getting a lot of inquiries about product from us.
Talk a little bit about the domestic side of things. So we don't have a ton of news on domestic demand. Some good news, though, as we look at the second quarter GDP, which was released today.
Yeah, absolutely. And I know that second quarter real GDP coming in at 2.6% was pretty much where pre-report estimates were. However, when we started the first quarter of this year, and I believe that number got revised to 1.2 today, 1.2 to 2.6, it's a move in the right direction. And again, I think another reason why we've seen maybe stronger livestock prices than we otherwise would have thought. Consumer spending seemed to be a large part of what was going on in terms of that GDP number that we got out for the second quarter. And I think some of that consumer spending certainly helped us in terms of meat products being consumed here in the U.S. So we get that added benefit from perhaps a little stronger demand as a result of that income growth.
Scott, the last couple of weeks, we've been pretty beef intensive in our conversations and haven't talked so much about pork. As we get into look at the pork market, as we look ahead, a little bit of some downside risk in the coming quarters here.
Yeah, absolutely. I mean, it's been a really good time for pork producers generally when prices have exceeded what many of us would have thought as we've gone through 2017. But we shouldn't forget about some of that downside risk that's coming as we get into the fourth quarter of 2017. And I go, really, we got two things that are at play. Number one, we got more pork to deal with. More pork to move in domestic channels, more pork to move internationally. Thank goodness that international demand has been strong for U.S. pork so far. But it reminds me that we're going to hang a lot of hogs in that last quarter of 2017. Yes, we have new slaughter capacity coming on board. I believe some of that capacity in terms of when it comes on board is slowing down a little bit. I'm not suggesting that we're by any means in a terrible situation when we get in the fourth quarter, but we could see a few weeks where we're pretty much taxing that expanded capacity, especially if it comes on slower than even we currently think that it will. And I think that's both from the construction side as well as getting enough labor to run those added lines in some of these new plants that are coming on board. That just does not occur overnight. So hopefully we won't see very many weeks where we're too strong in terms of slaughter capacity. But I'd certainly want to think about the opportunities to lock in some black ink and take advantage of those today, knowing what's coming in that last quarter of 2017. And, I don't think that's the last time we're going to have this conversation. When you think about the expansion that's been going on in the pork industry, it probably doesn't quit after 2017. We could be bumping up pretty close to slaughter capacity again in 2018, just depending on what happens to sow numbers as we move ahead. So I don't think this is just one more year of having to deal with this issue. I think it's something that the industry will continue to have to face. And I go, in many ways, that's good news, right? Producing more pork, growing the industry, we'll deal with some of the other issues that come with an industry that's in growth phase.
And finally, before we talk about this week's cold storage report, a little bit of a history lesson.
Yeah, so I think it's important for folks to understand what's coming when we think about the pork side of the market. And history doesn't necessarily have to repeat itself, but I think this is important. So when you look back to 1986, and I know that's a long, long time ago, I look at the number of years where we had less than 49 pounds of pork available per U.S. resident. That happened 8 of those years of 86 to 2016. And the average hog price over that period was about $61. However, if you look at the periods of time where pork availability exceeded 51 pounds per person, there were 12 years where that happened over the 86 to 2016 period. And there, hog prices averaged a little less than $43. We'd much rather be in that $61 market than the $43 market, I'm sure. But it just reminds me that in 2018, we're going to be getting pretty close to 51 pounds of pork availability. So just another way to think about that hog prices may see more pressure as we move ahead into 2018.
And maybe a good reminder for pork producers and livestock producers in general to look at some ways to mitigate and manage some of that risk.
Absolutely, and having a chance, and I use the baseball analogy of hitting singles and doubles as you look ahead into 2018 might be better than trying to hit that home run, because potentially that's a strikeout as well. So I do think price risk management becomes more and more important as we look at larger supplies of pork coming to the market even in 2018.
Scott, to wrap things up, cold storage numbers came out this week, and I think there's one number in there that stands out a little bit more than any of the others.
Yeah, so 22 million pounds of pork bellies in cold storage at the end of June. I think that's the number that gets a lot of attention. It certainly tells us why we've seen pork belly prices at or near records, as we've talked about already today. When you think about just the normal outflow for July of pork bellies, in some years we'd certainly see more than 22 million pounds that would have outflow in July. So we have had to use price as a way to really take care of what's very tight supplies. As economists, we always say price does eventually allocate what that limited supply looks like, and I think another case is going to unfold as we look at what's unfolded here in July in terms of those pork belly prices. So it's nice that we're tight. It's nice to see pork belly prices driving or help drive hog prices as we've gone through 2017. And I just remind us that I sure hope that everybody stays with pork bellies as we go ahead. When you get prices that are at record levels, you can find substitutes at some point in time, although many of us probably cringe at the thought of less bacon instead of more bacon on that sandwich.
And anything we're watching next week report-wise?
So I think one of the big ones we do get out next week, we do get to see USDA tell us about land values and cash rents. It's the annual survey that we get, so we'll see what's been happening to those land values with what's been lower crop prices. We also likely will get a restaurant performance index gauge out next week as well.
All right. Have a great weekend. We will talk to you next Friday.
Very good, Megan.
Thanks, Scott. To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com, click subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. I'm Megan Grebner on Brownfield.